Hi everyone, welcome to those of you joining us on the live stream. It's a pleasure to introduce this session on behalf of the World Economic Forum. It's a complement to our other two sessions that we're live streaming today on resetting global trade, as well as trade and COVID-19. But here we wanted to bring together a handful of experts to take a frank look at current events, as well as key trends. The panelists are going to share their views on what business should be watching out for, whether trade relations are going to improve anytime soon, and if technology really does change everything. We want to know what you think too, so we'll be using Slido to run several polls, which you can access via slido.com and entering the event code MC2020TRADE. My colleague will be putting up a slide shortly to show you how that works. We're calling this a virtual brown bag lunch, though we apologize we're not actually able to buy our panelists lunch, dinner, or breakfast, given where they are. We're indebted for your time and willingness to participate. Let me introduce them. Moderating today's live stream is Dmitry Grozovsky, who's the director of Explain Trade, a trade training consultancy and a visiting professor at the University of Strathclyde. Prior to launching Explain Trade, Dmitry was a trade negotiator for the Australian government. Joining Dmitry on the panel, we have Professor Henry Gao, who's Professor of Law at Singapore Management University. Henry has an incredibly impressive and long list of academic positions held across Asia and the world, with over 20 years' experience in international trade law. Next up, we have Elisa DiCaprio, who's the head of trade and supply chain at R3CEV. Elisa joined the company, which is a DLT and blockchain software development company from the Asian Development Bank, where she was a senior economist working on digital trade, trade finance, and innovation. And last but by no means least, we have Scott Lincecum, senior fellow with the Cato Institute. Prior to his current position, Scott spent 2 decades practicing international trade law at Whiting Case and has co-authored a long list of policy papers and op-eds with deep expertise on trade, subsidies, industrial policy, manufacturing, and global supply chains. He's also a senior visiting lecturer at Duke University Law School. Welcome to you all, and handing over to Dmitry.
Thank you very much, Kimberly. It's an absolute pleasure to be here. And right from the start, let me thank Kimberly, Sean, and the entire team at WEF for organizing these important meetings. I think we're all missing meeting in person and having these discussions face to face. And it's fantastic that we can do this, if not a perfect substitute, then at least a geographically diverse one. In just a minute, Kimberly's colleague will be putting up a Slido poll where you can vote on our first question for the day, which we'll be asking again at the end of the session. And specifically, what we want to know is about your level of optimism about crossing borders and doing business across borders years from now. What your view is on the direction of travel and what that'll mean for your businesses, your interests, and so on. Trade policy and the international trading system aren't at the top of most priority lists right now. Very understandably, there is a pandemic. Everyone is focused on keeping their businesses strong, keeping their businesses going through these tough times. But trade developments haven't stopped during the pandemic, and the trend lines before weren't necessarily good. With that said, there's room for optimism and room for pessimism, and that's something I want to explore with our panelists today. Lockdowns have led to a quantum leap in remote working and remote delivery. But at the same time, COVID saw over 70 countries impose export restrictions. And there's a strong movement towards at least discussing onshoring and moving supply chains back inside countries and unpicking a lot of that multilateralism and global supply chain movement that has characterized the last few decades. Whatever ceasefire was won in the US-China trade war through the phase 1 trade deal seems increasingly fragile. The EU is flexing its trade muscles, including the creation of something called the Chief Trade Enforcement Officer position, which for those of us worried about protectionism and new barriers to trade, sounds a little bit ominous, even if I'm sure the EU would dispute any dark intent. India has recently blocked a host of Chinese apps. The debate over Huawei and its role in government procurement goes on. The Joe Biden campaign has just released its onshoring plan, that certainly has some troubling protectionist elements for those of us who believe that ultimately borders should be open. So there's a lot to think about. And what we would like to do in this session is to stick very much to what is interesting to business. You don't have a lot of time to focus on the theories of trade policy. You don't have a lot of time to think about the grand strategies. You want to know what you should be looking at, what you should be focused on. And this is what we're going to try to talk about for the next 40 minutes or so. So with that, with all of that said, I will pass it over to Scott for the first question. Scott, I mentioned before that the Joe Biden campaign has released its onshoring strategy. And I think for a lot of us in the world who are glued obsessively to watching US politics on trade and trying to read the tea leaves, something that's very confusing is that while free trade polls absurdly high in the US, when Americans seemingly agree on nothing, they agree on free trade. But at the same time, protectionist ideas seem to creep into the manifestos and the talking points of both sides, whether that's Democrats or Republicans. What explains this phenomenon? Is that phenomenon likely to translate into policy changes? And I guess most importantly, now that he's announced his candidacy, will presumptive President-elect Kanye West do things differently?
Thanks. And first of all, it's great to be here. Thanks for having me. Yeah, I think in Dimitri's question, there are actually several things going on. The first is, yes, trade polls very well in the United States, but it is really critical to understand that in those poll numbers, there are several factors and several things affecting them. The first is a simple Trump effect. You've seen over the last few years, and this is consistent with decades of polling in the United States, that trade is often more of a partisan issue than it is a policy issue. And the Trump effect is essentially you're seeing Republicans become more trade skeptical and Democrats become more supportive of trade. Really consistently right along the lines of the 2016 election. That said, there are at the same time some real shifts going on. You are seeing Democrats generally over the last 10 plus years becoming more supportive and Republicans becoming a bit more skeptical. However, Republicans have kind of leveled off in that regard. And as a result, you actually are seeing support increase. You're also seeing a significant demographic difference. Older Americans tend to be more trade skeptical. Younger Americans who perhaps haven't been through the disruption of NAFTA or the China shock or whatever, who have jobs in that are Zoom chatting or doing webinars and that kind of stuff. They don't really experience the disruption firsthand or know anyone who has. They love their iPhones, they love their Fortnite, the rest, they tend to be more supportive. But when you get really into the weeds of these polls, what you see is, first of all, the vast majority of Americans don't care or don't understand trade. Trade never rates highly on a priorities list of policies. In terms of simply intensity of those views, trade is very low, except there is a small but politically significant portion of the electorate, particularly in swing states like Ohio and Wisconsin and our so-called Rust Belt, the United States Midwest, that do have strong views on trade. And that sets up really quite the perfect storm for cynical political operatives to push protectionism. And so even though you might have 70+% of the United States pro-trade, because there are these discrete interests that vote on a protectionist litmus test, and they live in very important parts of the country, you are going to see presidential campaigns continue to cater to that. And I think that will continue regardless of the candidates. But of course, it has been amplified in the last 4 years with the Trump election and the fissures that he has exposed in the United States electorate and in the Republican Party.
Thank you. There's a lot we'll come back to there in a minute, Scott, but I'd like to move away from geopolitics for just a bit and get somewhat into the nuts and bolts with Alyssa. Now, I'm from a government background, and when you work in the civil service, you tend to think of tech and tech entrepreneurs and tech companies as, firstly, effectively magic, and secondly, as moving in like their own plane of existence that's almost policy independent. That anything governments do, tech companies will find a way around, they'll accommodate, they'll innovate through it. But the more I learn, the more I suspect there are elements where that's not true. And Alyssa, specifically in your field of trade and tech in trade, what are the areas where tech companies can't operate in a policy agnostic way?
Interesting question. So I think, you know, what we've seen particularly in the blockchain space is that even though maybe government engagement isn't really holding anybody back, the policies are. Because what's happening is you can build technology to do anything, and that's what people have done. But then you sort of get to this position where the legislation in your country of origin or you know, the cross-border jurisdictions really limit the ability to apply these solutions. Funny enough, it's not really clear what digital rules are limiting blockchain. A lot of it's around electronic documentation. A lot of it we don't figure out until we actually try to apply something. In the US, for example, there's something called UCC Article 3, which requires electronic negotiable instruments to be written on a piece of paper and to be signed, which are two things blockchain can't do. And so this means that, you know, any blockchain application that uses that is going to have a contract that's signed by all parties, which kind of centralizes it. So, you know, that's one particular problem. Another very specific problem is bills of lading, which I know sounds super boring, but it's actually really interesting. So bills of lading are the documents of title and kind of receipts for goods that have to accompany the shipments as they change countries. Only 1 or 2 countries actually recognize electronic bills of lading. So this means that any trade transaction has to fly paper documents across the world in order to have the original documentation included. And, you know, increasingly, what was interesting during COVID is that this couldn't happen. No freight forwarders were accepting parcels to go to India, for example. And so if nobody's going to accept your original documents, how are you going to get it to the port where you're trying to offload the goods? You can't. And so even though there's a lot of these limitations, and which were not necessarily clear what is the full population, increasingly governments are getting much more involved in this, particularly after COVID. They're recognizing, look, it was an emergency, we went digital, we need to fix this. So, you know, what's useful about blockchain is it's the first time that you have a technology that's global, right? So we have applications in Nigeria, in Vietnam, in Brazil, all across the world. So regulators everywhere are acknowledging the fact that we do need to start changing these rules, and they're engaging with the technology providers to figure out how to do this. So it's a very different environment even than I would say we faced at the end of 2019. Which is great for everyone.
It's really nice to have a speaker on a trade panel conclude with great for everyone rather than just staring morosely into the webcam as a tear rolls down our cheeks. That's fantastic. And there's also a lot we want to come back to there. But I'm actually going to pivot right back to geopolitics for a second, but specifically geopolitics and business. Henry, you're one of the leading experts on trade and Asia, of trade in the Asian context and how that interacts with the rest of the world. But I am going to ask you to just for the next few minutes, take some of your leading academic hat off and do some business leader empathy. If you were the chief strategy officer, if you were the CEO, if you're a hedge fund manager, looking into firms in Asia, looking to do business in Asia or out of Asia, what would be the few key trends you would be following? Would you be optimistic, pessimistic, cautious? Where would your gaze fall?
Well, Dimitri, you are given a topic that is enough for a 3-hour lecture, but I will be brief due to the limitations of time. I will speak only on 3 things. The first one is the great decoupling, and this is not just the decoupling between the US and China, but also in this whole region. As you know, East and Southeast Asia has one of the highest intra-region and intra-industry trade in the world. There's really a vibrant regional supply chain in this region. But the US-China trade tensions made it very difficult to continue this modus operandi. We already saw this, for example, when the TPP was negotiated, when the US requested to put in a so-called yarn forwarding rule, which requires that the yarn used in the fabric in the clothing must be from the TPP members. So that basically cut China out from the supply chain. And now it is even more difficult due to the US-China trade war, where you see firms pulling out of China and looking for alternative manufacturing bases. And this is causing great disruption to the supply chain for firms operating in the region. The second one is the politics. Now, when Bill Clinton ran for president in 1992, he used to say, "Is the economy stupid?" This largely summed up the sentiment among the business community back then, when they only need to follow the money and don't need to worry about politics. But this was the zeitgeist of the different era, with the triumph of capitalism over communism, and people bask in the finality and the certainty of the so-called end of a history moment. This continued until about 10 years ago, when the collapse of the Doha Round and the rise of geopolitical tensions made business operations more susceptible to the influence of political factors. And this has become more acute over the past few years, with, for example, the US banning investment by Chinese firms and the use of Chinese telecom equipment, Japan restricting semiconductor exports to Korea, China restricting coal imports from Australia, India banning Chinese apps like TikTok, and so on. So it's like we are going from the rule of law to the rule of the jungle. Therefore, the good old days of just carrying out your business without worrying about politics are gone, because now it's an entirely different game. To paraphrase Clinton, now is the politics stupid. Now, number 3 is e-commerce. Alisa already said a lot about this, and I don't really need to elaborate on the great potential of e-commerce, which is becoming even more obvious with the onset of COVID-19. But as a lawyer, I feel obliged to point out the pitfalls in the e-commerce boom. First is the rise of different digital realms, with the US, China, and EU all having their different pet peeves when it comes to digital trade. Second, beware of digital protectionism, which can take many different forms, like China's Great Firewall, EU's GDPR, and also the digital service taxes keep popping up around the world, just like mushrooms after thunderstorm, which you see so often in Singapore those days. So I'm sorry to end on a rather pessimistic note, but that's our nature as lawyers.
It's almost comforting that we're back into depressing territory, Henry. I was beginning to get worried we were out of touch with the zeitgeist on trade. Thank you very much. I wanted to come back maybe perhaps to you first, Alyssa, because a common theme that's emerged from all 3 of your interventions, you've got Scott saying that Americans don't care. You've got Henry saying that, look, this is all about politics, and politics fundamentally is about the general public and communications. And you yourself talked about, you had to preface your Bill of Landing remarks by saying, this is really boring. And this is boring stuff that makes a big difference. Now, I know you have to communicate blockchain to people who have struggled with a fax machine. So I know you spend a lot of time thinking about how to accessibly communicate complex subjects. What is the trade community, what are trade proponents not doing that they should be doing to reach people on some of these issues?
That's an interesting way to put it, because I think everybody at this point is actually trying to actively engage in blockchain. I think the disconnect we have is that the government wants to engage via regulation, and the sort of private sector wants to just create rule books where the government is lagging. They get very frustrated with that. And that's not necessarily the right way to do this, because if you're going around the fact that legislation doesn't work, then you're not actually helping this. So I think, what's really useful about this is that blockchain is basically electronic documentation and processes. So once the sort of both parties have gotten together and understand that the way forward in this is really to figure out how to allow that. You're not just allowing blockchain. I mean, blockchain is kind of a catalyst, right? The reason that it gets so much interest is it's because simply it's the first time that all over the world, everybody is looking at the same technology at the same time. That's it. I mean, we have innovation, kind of coming up everywhere. We have governments everywhere being involved. But there's so much that lags that becomes a little bit of a problem. So I think entrepreneurs are increasingly getting more involved in this. Governments are doing RFPs, requests for proposals around blockchain. You're seeing a lot more startups being engaged, and the conversation is becoming a lot more intelligible to both sides. So the UK, in the UK FTA negotiating objectives with the US, for example, blockchain was in there. They kind of said, we want to figure out how we could put this in an FTA. So there's a lot more active engagement and understanding about what is happening.
Okay, so that's in the blockchain space. If I might go to you, Scott, again, and basically pose sort of a similar question. If we could just do a microcosm. So let's take the absolute pointiest end of the WTO appellate body dispute. What is going on with the Airbus tariffs, and what does that mean for businesses really in Europe, but really on everywhere? And what does the appellate body crisis means? Terrify the hell out of us, please.
Well, I think the Airbus dispute itself just injects a lot of uncertainty into any companies in the United States or the EU that are trading in goods, and trading especially in sensitive goods. If you are, for example, an American whiskey exporter in Kentucky, you have some reasons to be concerned, or at least more concerned, because the fact is that these two sides are going to keep poking at each other with retaliatory tariffs as these are, to the extent these are actually approved by the WTO. And unfortunately, you don't really know what's going to get hit until that list comes out. And then the next thing you know, you're on the hook for additional taxes that you, of course, don't want to pay. And that's on the importing side as well, of course. But I think more broadly, the appellate body situation is extremely important. Now, of course, as a recovering lawyer, I'm going to always claim that what I do is extremely important. But it is in a couple ways, and that is that the appellate body provided some level of predictability and consistency, something that business people usually like, to the global trading system and to global trade rules, and then to the national laws and regulations that are implemented pursuant to those rules. And you particularly see that in the trade remedy space, so anti-dumping, countervailing duty rules and stuff. And the appellate body created some sort of finality, unless you're talking about zeroing, of course, but if there was a ruling issued that tended to filter through the national authorities in terms of future trade remedies cases. Without that, you really stand to have two problems. One is the proliferation of panel decisions that aren't quite congruous on quite important issues, not just trade remedies, but for example, national security tariffs and the rest. But the other problem is that you could have certain WTO members appeal these panel decisions, what we call into the void, which essentially makes them sit around and wait for a new appellate body to be formed. And I think that creates not just broader commercial concerns about predictability and consistency in the market, but also specific concerns when it comes to the products that are subject to those disputes, and the tariffs and other trade measures that are subject to those disputes, and just serves to gum up the system even more.
So would you say, is it fair to say that the Airbus dispute is worth, I think, $7 billion in retaliation annually for pretty much the rest of time, unless the two sides figure it out? Is it fair to say that what will happen now in the absence of an appellate body is that countries with a perceived economic grievance will be far more likely to take more radical steps faster and with less of a legal basis and with less grounds for legal appeal than before?
Yeah, I think it depends on the country. I mean, I certainly think you raise a good point that some countries are just going to say, to heck with this. We're not going to adjudicate we're not going to go to multilateral dispute settlement. We're just going to retaliate. And it's not like the United States and China have been very good examples in that regard. However, so far, it seems there hasn't been a lot of that type of activity outside, again, kind of the big boys in the U.S. and China. And so, but the question is, how long will that good faith and how long will that restraint last? And quite frankly, I think it is expecting too much of WTO member governments to sit on their hands for years. A few months of filing these statements like the US and India did, that they're going to hold off while awaiting the resolution of the appellate body situation. That's fine. The EU creating this kind of separate fake appellate body for a little while, that's fine. But if this drags on, and if countries start seeing panel decisions fired off into the void, or they start seeing countries simply point to contravening panel decisions and say, you know what, look, we don't have to abide by this because another panel said this, without any sort of resolution by a higher authority, I think you will see countries start to just simply avoid dispute settlement altogether and take matters into their own hands. And let's face it, the EU's trade bazooka is sort of designed for that purpose, at least pointed towards the US and anybody else that sort of thwarts the dispute settlement system.
I think you really strike at the heart of the matter there, where there's a question of law here, but there's also a question of, I suppose, philosophy and politics. And that brings us back to Henry's point. And Henry, I want to come back to you. I think US trade thinking, though it's sometimes opaque, is very much out in the open for all of us to see. We can literally read it in block caps on Twitter some days. But I think a lot of us in the West find it much harder to discern what Beijing is thinking in a general sense. What is the long-term strategy? What's the short-term strategy? What motivates decision-making in Beijing around trade? I realize it's a big ask in just a few minutes, but if you could just give us a flavor, that would be fantastic. And I think it would elucidate for a lot of people some unanswered questions.
Well, I guess those in the US, like Scott, benefit from the daily tweets of your president, where he was trying to tell everyone what the directions of the trade policy are like for the US. But tweet has a word limit, it limit your tweets to only 280 characters. And Chinese, luckily, Chinese is a more succinct language, so we don't really need 280 characters. And we only need 4 characters. At the 19th Party Congress in 2017, President Xi made a marathon speech spanning 205 minutes, and the word trade was mentioned 12 times. But it all boils down to just 4 Chinese characters, which are 贸易强国, literally means trade power. Now, what does these 4 characters mean? I think it includes at least 4 things. First, China was trying to improve the quantity, the quality of the imports and exports, and try to move up the value chain. Now, when China just started the reform opening up 40 years ago, the key was labor-intensive and resource-intensive industries. But now China tried to promote technology-intensive industries. That is why you see initiatives like Made in China 2025, and also there's a big push by the Chinese government to go from made in China to created in China. So that is part of this strategy. The second one is to try to boost imports and domestic consumption. China realized, with the ongoing U.S.-China trade war, that if you rely too much on exports to one country, you could be held hostage when the political climate changes. So China wanted to move from having more exports to have more imports. And this is what is shown, for example, by the recent push to have the import-export in China, which is basically trying to boost the numbers on the import side as well. Number three is to try to diversify its trade, both sources of import, like, for example, recently you saw China signing big oil purchase deals with non-traditional sources of import, like Russia and Iran, and also diversifying the sources of exports, like China's Belt and Road Initiative, where China tried to help all these Belt and Road Initiative countries to boost their infrastructure and then to try to build free trade zones and also trade with these countries. The last but certainly not least aspect of this trade power strategy is to make new rules, both at the WTO and also at the regional level. At the WTO has been discussing proposals for reform for a while, and China has submitted its own proposal. And as you can see, the Chinese proposal made interesting tweaks to many of the points raised by other members. For example, when other members try to criticize China for having too many SOEs and too many subsidies, and push for the concept of competitive neutrality, China counter-proposed the concept of ownership neutrality. Basically, China said you should not discriminate firms just because they have a particular ownership structure. And also in the ongoing negotiations in the joint statement initiative on e-commerce, China also proposed that we should have rules on e-commerce related network equipments, so that countries cannot ban the export of key components which are necessary for certain technology manufacturers like Huawei. And they also cannot ban the use of certain equipments by the telecom operators, again, pointing to Huawei. And also at the regional level, for example, you see the RCEP is shaping up, and at this critical juncture, India has announced that they are pulling out. And this gives China even more space in trying to push its own rules at the regional level. So those are the key components, I think, of this trade power strategy.
It's tremendously useful, Henry. There are a couple of things that surprised me there. But one thing that I suppose was perhaps unsurprising is this focus on technology. And I want to come back, we don't have a ton of time left, but I want to come back to you, Alyssa, specifically on the blockchain regulatory space. So in a lot of other spaces, you hear about this idea of either a tripartite regulatory world emerging, where you sometimes even hear of the idea of maybe there will eventually be a sort of a Chinese internet, a US-centric internet, and an EU-centric internet. Are you seeing in the blockchain space different, I suppose, flavors or approaches to regulation? And is there one that, in your view, industry leans towards? Is there one that they're wary of?
It's so new that I would say there's not a discrete difference in how it's being approached. I mean, you have some countries like, for example, Singapore and Hong Kong, which are moving forward very quickly. You have other countries like China, which is actually pushing blockchain quite hard and recommending that it's used. And then, you kind of go back and you have countries like the US that's like testing it out. but not necessarily going anywhere. The challenge is that when you're talking about blockchain, it covers data localization, it covers electronic documents, it covers financial services, it covers transparency into origin. So it's, you know, if you take a free trade agreement, for example, it's not in just one chapter. Although, you know, I've spent a lot of time sort of advocating for the fact that now that we're in this this new world, right, we really need some sort of an overarching agreement on data, right? So the WTO, for example, has, you know, an agreement on trade in goods, an agreement on trade in services. Trade in data is different than both of those. So really what you need is to see this at the global level, some sort of rules around how we transfer and interact with data, because that's really, when you're talking about a trade transaction, most people think about, okay, you know, you have a buyer, you have a seller, you maybe have a bank involved and you know, some customs authorities. But when you really think about it, most of what happens in a trade transaction is trading data, right? I'm sending, you know, the purchase order and the invoice to the bank. The bank is adding information to that. We're sending it to the customs official. We're filling out the customs documentation in quadruplicate on color-coded paper. And so by facilitating that, you're really facilitating global trade. But I really think that the challenge is that because it's not in one specific area in which we're already familiar, it becomes very, very difficult for governments to understand what to do.
Okay, we just have a few minutes left, and I want to torture Scott a little bit because it's my chair's prerogative. One of the earliest things you said is, look, Americans don't care outside of a small group of select interests inside some swing states. If I could gather for you in a room every swing state voter deeply invested in trade who maybe doesn't agree with you, what would be your elevator pitch for the kind of open markets, free trade, multilateral rules idea that you would get on the assumption that they are not allowed to throw things?
That is a extremely difficult question. And I think it's the problem that free traders in the United States have faced for decades. The fact is there isn't really a great elevator pitch, but I think that the place to start is looking at the pains and corruption that are associated with protectionism in the United States. You know, it is often thought that free trade is this globalist elite, and of course I'm saying this here, it's pretty funny, you know, conspiracy against the working man. But the reality is, at least in the United States, when you look at our trade protectionism, it is very much just simply certain corporate interests asserting and lobbying for protection so they can get a leg up on other corporate interests, whether it be in the United States or abroad. The losers always end up being consumers, either consuming companies or individual consumers, meaning the folks in that room. And most importantly, those measures tend not to actually work in terms of protecting American workers and the companies that are seeking protection in the long term. It just is not a very effective strategy. So, you know, I wrote a paper a couple of years ago documenting the kind of historical failures of American protectionism in this regard. And that's really what you see, those three elements: very high costs, failed objectives, and throw in a little political corruption along the way. So I think that that's the pitch. The problem, I will critique myself, is that it just simply is not effective when you are placed against the very concentrated harms that come from trade disruption, really any economic disruption, but trade disruption in particular, because it's tied to foreigners, or at least our political leaders tie them to foreigners. So it makes it a very difficult sell. But in general, that's where I think you need to focus.
Okay, I think we're all really hoping you had like a perfect answer to that. We could all replicate and fix the global trading system, but I think what you said reflects a difficulty. I think it reflects a challenge of broad benefits versus narrow but very visually acute harms.
Yeah. And I think that when you add in the political dynamic that I mentioned earlier, it really is a seriously uphill climb, particularly right now, particularly in this climate with a kind of a rise of populism, whether that is a legitimate rise in populism or it's just very trendy among the political elite here. It doesn't matter. Fact is that when you combine these long-standing difficulties of selling free trade in the United States to a country that is not very dependent on trade, that is not very, our percentage of GDP for imports and exports is rather low compared to a place, like Singapore or elsewhere. And when you have that, and then you also have those political forces, it makes it quite difficult. But it is nice at least to see those general poll numbers improving, regardless of whether they don't translate to political points.
Fantastic. Thank you so much, Scott. I'm afraid we're almost out of time. I have a number of duties left. The first and most pleasurable of which is, of course, to thank Alyssa, Henry, and Scott for a fantastic panel and for putting up with me. Thank you so much for your time at what I think is managed to be an inconvenient time for everyone involved. So thank you very much. Scott had to be dragged out of pajamas to be here. Henry, we're interrupting his dinner. It's also my job to tell you we're going to rerun that poll we ran at the start just to see if we have managed to depress you further or perhaps encourage you. The previous poll, 61% of you thought borders were either going to become harder or significantly harder, which isn't hugely encouraging for the global trading system. But perhaps while you do that, I can share some of the thoughts I had as I watched this terrifying graph grow. Just some of the things that I picked up from our panelists. I'm sure you guys got lots of things out of it as well. I think the first lesson is that politically, protectionism is going to have a strong bat to throw in the US and pretty much everywhere. I think as Scott very correctly said, there are always going to be perhaps a broad number of people who sort of think trade is good but won't vote on that question, and then a small group who have very strong opinions and often protectionist opinions and will vote on it. And that will mean protectionism is probably here to stay in our politics for a while. And I think if Scott can't put together a punchy elevator pitch, probably nobody can. So there's no magic bullet for this in terms of communications. From Alyssa's commentary, I took away a couple of interesting things. So for me, it's interesting that there is enthusiasm about blockchain as a concept. And I think certainly anyone who was inside government or civil society, really anywhere over the last few years, at one point had their boss storm into their office and declare that everything must be blockchain from now on. When you asked them what they meant, they just repeated the word blockchain over and over until you cried. But there's clearly a momentum behind blockchain, but there are some of these concrete, really practical, literally pen and paper issues around regulations where blockchain can't just solve it on our own, where governments need to invest the time, resources, and I suppose labor and political capital to change some of these foundational things so that blockchain can plug into them, pick them up, and reach its potential. I'm hoping that's a correct characterization of some of your points, Alyssa. Excellent, I'm getting a thumbs up. And Henry, I think, there's a lot to unpack there about the way that some of the emerging trends in Asia. But I think what's inescapable from especially your summation of Beijing's approach and the CCP's approach is the centrality of technological dominance and trade power together. This idea that for China, at least in the short to medium term, they want to be huge players in the technology space, and that is inevitably going to bring them into some of these conflicts we see with other countries, most notably the US, for a lot of whose power is built on technology dominance. And the friction at the edge of those two worlds isn't likely to go anywhere under present politics, and regardless, I think, of what happens in the US election. So that is my summation. All of our panelists, including myself, have generously agreed to hang out at the hashtag MC2020 Trade Twitter today. and to keep checking it in case you have any questions for us. I saw from that poll, and I know Kimberly's busy tabling the results, that I think we managed to depress you about as hard as you were at the start, though I noticed some of the significantly hardest disappeared. So perhaps we did give you some cause for optimism. I blame Alyssa for that. The rest of us, I think, were quite depressing. So on that note, it is my job to once again thank all of our panelists. Thank you so much for joining us. Thank Kimberly, Sean, and the whole team at WEF for putting this on. And to remind you that in about 2 hours and 45 minutes, there will be another WEF seminar called Society, Trade, and COVID-19. That's at 3 p.m. European time, and it looks like a fantastic one. So I would encourage you to tune in unless you are asleep. Thank you again.